Sarah Berry, CPA, Texarkana, Texas. Today is Saturday, March the 13th. It is Saturday during the height of tax season, so hence the baseball cap and the no makeup. But I wanted to come to you guys. I'm sending out an email newsletter to my clients. I want to drop this video in there, cover some of the high points with you guys, what I think is most important at this point. So the purpose of this video is to talk brief overview over the most important things in the American Rescue Act that was signed into law 2 days ago, I believe. So probably the most important thing that a lot of my clients are concerned about is the stimulus payment. So the stimulus payment, this will be the third round of stimulus payments. So this one is supposed to be a larger amount. It's $1,400 per person, and it is also eligible, so college age kids are eligible to get it. So prior, if your dependent was over the age of 16, you did not get a stimulus payment for them, whereas you did get a stimulus payment for the dependents that were under age 16. So in this round of stimulus payments, your dependents will qualify regardless of their age. So that's a positive, and most families will end up with more money because of that. On the flip side, they have lowered the phase-out range. It's still married, filing joint. You still phase out at 150, but you phase out quicker. So if your income is over 150, you may have received more in prior stimulus payments because of the way it's an immediate phase out at 160,000. So you start phasing out at 150, completely phased out at 160, whereas before you had a longer phase out range. So there's some differences there. Good news is I am hearing some chatter nationwide that people are already seeing the payments show up pending in their bank accounts. So you may be seeing that money come in pretty quickly. So I have also heard some chatter that the IRS is saying that they are going to hold off on processing tax return refunds at this point because they are more focused on getting these stimulus payments out. We have not seen anything official on this, but just want to give you guys a heads up. If you're expecting a refund, it may take a little longer than the 10 days that we were seeing a couple weeks ago or so. We were seeing a 10-day from the time that we e-file until the refunds show up in clients' bank accounts, but it may be longer now because the IRS is shifting focus to stimulus payments. So as of right now, the IRS is still holding to the April 15th deadline for tax returns. So we're still aiming for that. This Friday, March the 19th, is our internal deadline for you guys to get us your information if you want your tax return prepared by April 15th. Now, I expect that the IRS is going to change that deadline. They are going to extend it until June or July. Everyone is pushing the IRS to do that. There were some retroactive changes in this bill. Going back and changing the 2020 tax laws when you are well into the 2020 tax season is a very bad idea. Now the IRS has to go back and rewrite forms and worksheets and schedules, and then they have to give it to the software providers, and the software providers have to go rewrite the software and update to us, and then we have to come in and actually do all these tax returns, and in 30 days, that's kind of hard to happen. So I feel sure that the IRS will give us an extension. If you are a Texas client, then you already have an extension to June 15th, so definitely no rush there. If you're an Arkansas client, we did call you and let you know that you need to have your stuff to us by March the 19th in order to meet the April 15th deadline. Although I fully expect that the IRS is going to extend it, I hope that they do, because the amount of pressure that they're putting CPA firms under and tax preparers under this time of year is substantial in a normal year, but it's even worse this year. So the first thing I want to say is take a deep breath and patience. So over the past week, 2 weeks, I prepared multiple tax returns, get up to the review process and realize, oh crap, tax laws changed since it was originally input by a tax preparer. And from the time that it was dropped off by you guys, input by a tax preparer, and then it got to my review desk before we hit the e-file button, there have been tax law changes on them. So we've had to stick them to the side. It's really disheartening to think that, hey, I can check off tax returns, these are done, and then realize there's been changes to the laws. So what's some changes to the law retroactive to 2020? We have probably the most talked about is the unemployment income. So unemployment income is normally taxed by the IRS, but it's not going to be taxed. Up to $10,200 of it will be considered tax-free income on your federal tax return. It's still taxable to states, although Arkansas changed it. It's not taxable to them. So the unemployment income is not taxable to the state of Arkansas at all. And it's not taxable to the feds up to $10,200 if your AGI is $150,000 or less. So we have seen a little bit of guidance released last night from the IRS, but I think there's still going to be some changes in some schedules and calculations. So if you received unemployment income, your tax return's getting held so that we can make for sure and we get you the largest refund or lower the amount of tax that you owe on April 15th or June 15th. One of the other changes that we did not see coming was the premium tax credit, which is the insurance that some people receive on the marketplace. So it is a lengthy, complicated calculation. I'm not going to get into that too in depth, but if you receive too much in premium tax credits because you underestimated your income for the year, and you receive too much subsidy of your health insurance premiums monthly, basically is what that is. If you got too much credit, then normally when we file your tax return, we do a reconciliation of how much should you have received in premium tax credit, how much did you receive in premium tax credit, and if you received too much, you owe that back. Well, in this bill, they're saying you don't owe that back. And so we've had several returns that we prepared that owed tax because they received too much premium tax credit. So we have to put those on hold. We haven't received guidance yet from the IRS on whether we have to amend those or not. So that's another big change. So one thing that was in the bill was they are putting more money into the PPP. I believe it's $7.25 billion off the top of my head. You know, when you add all those zeros there, they sometimes run together. But I think it's $7.25 billion is how much has been added to PPP. Here's the problem. PPP is scheduled to run out on March 31st. And banks are going to stop accepting applications probably like next Friday or the next Friday. So probably March the 19th or March 26th or sometime in that range, the banks are going to stop accepting PPP applications. So Congress put a bunch of money here, but then they didn't extend the deadline. I think it was probably an oversight that they didn't extend the deadline. I feel like they probably will move that out a little further to keep that PPP window open. But as of right now, PPP is supposed to close March 31st. So if we're preparing your PPP, I have a stack of PPP applications that I'm about to review and get to you guys for signatures and to the bank. But if you've been dragging your feet and you want to get a PPP and you're a client of ours, you need to reach out and talk to us about it, and we can work up the calculations to see if you can get anything, if it's worth your while to do that. So that is an urgent priority to deal with PPPs because of that quickly approaching deadline. So that's more urgent to us than getting tax returns out right now. I think the key word right now is patience. So this has been a patience trying last year and a patience trying tax season for sure. A stat that I just read online on the IRS website is that they have processed 25% less tax returns this year at this point than they had last year at this point. And COVID was hitting last year. So they probably processed less tax returns in 2020 than they did in 2019. So people are getting the message that, hey, don't rush to file your tax return. You may be making a mistake and cost yourself some money by doing that. So I want to reiterate that. Take your time. We're taking our time, not rushing to get this done. Unless there is a reason to file a tax return to increase your stimulus payment. Maybe you've added a dependent or something like that. So if you have added dependent and you think you want your stimulus based off of the new dependent on the 2020 return, then you may need to go ahead and get that filed as soon as possible if it's not too late. Some payments are already clearing. Another stat on the IRS website is that only 27% of the phone calls into the IRS are being answered. And I'm here to tell you, just because they're answered don't mean you're going to talk to anybody. Lots of times you'll sit on hold for an hour 2 hours, and then they'll say, sorry, we're currently experiencing a high call volume, call back later. And then you hear the dial tone. So it's a very trying year, but try to have patience. Let's see. I think that covers, there's one other thing in the bill that I wanted to mention on this video. I'm sending out a lengthy newsletter that goes into more detail. I highly recommend reading that. But one thing that you may be hearing about is the increased child tax credit. So this one is not retroactive to 2020, and for that I'm very thankful. It only goes into 2021 in future years. I'm not clear exactly how much they're going to start advancing in July, but apparently they're increasing the child tax credit from $2,000 to $3,000, and if your child is 6 and under, then it's $3,600 a year. And they're going to start sending out some advance payments apparently in July of 2021, and that's going to go through December of 2021. I see some issues with those advance payments because we're having a hard time getting from our clients like how much you received as a stimulus payment, because it was just direct deposited and some people don't pay attention to their account that much, and the first one come in almost a year ago and you can't remember, but we have to know that so that we can report it on the tax return to make for sure if you got shorted, you get more. So this is the same situation we're going to run into with the child tax credit. They're going to start sending out advance payments. This is a 2021 credit. They're going to send out advance payments in July through December, put them monthly into bank accounts, but there's a phase out range. So you don't know if your income is in the phase out range for 2021 or not. You may have added a dependent, or your dependent may have aged out over the limit. And so tracking this is going to be hard. And another thing is, a lot of my clients, they depend on the child tax credit to offset taxes in our tax planning strategy sessions. And so if you're getting that advanced payment, then you're not possibly going to get as much child tax credit when you file your tax return. So then you would actually have an unexpected tax bill because you've got that advance credit deposited. So I see that the IRS is required to create a portal online, and that we have the option of opting out of that. So when we have more details on that, I will push that information out to you guys. My gut feeling right now is if you're not financially strapped, we might want to opt out of those advance payments and prove to me that you opt out of them. So it makes the tax return process easier, but also helps offset your taxes at the end of the year, instead of getting this money and then having to turn right around and give it back and trace how much you received. So I think that covers pretty much everything I wanted to get out to you guys today. Thanks so much, and I hope you guys are having a good weekend.